Hey guys, how you doing today? Quick question. Are you guys interested in investing in real estate, but you don't really know where to start, what kind of considerations you really need to be paying attention to as you get into the marketplace? Hi, I'm Eric Loya with Father's Plan Realty based in Southern California, and I am the co-owner, co-broker, as well as mortgage lender in the Southern California area. I wanted to talk to you guys today about some of the most important factors that real estate investors do not consider before they start investing, in which my own experience in investing in the past 10 years, these are things you really need to consider in order to have a successful investment opportunity land in your pocket, as well as find the best deal possible for you and what makes sense for your particular goals. So I'm going to jump into it. I'm going to share my screen here. Shouldn't take more than a couple minutes, and then we're going to dig into it. So my top 5 real estate investment tips. Number 1, we're going to talk about whether you're buying an investment opportunity for cash flow or value add, which is also known as a flip to the layman person. Number 2, we're going to talk about choosing the ideal market, what you need to pay attention to in specific markets when you're investing. We're going to talk about leverage, what that means, and whether it's a good idea to leverage or not. Number 4, we're going to talk about buying under market value depending on the type of investment project you're taking on. And then number 5, the most important, is taking action, getting out there and making it happen. So let's get right into it. Number 1, cash flow or value add. So cash flow investments are the true building blocks to a 21st century retirement. Look, guys, we're post-pandemic right now in this world of COVID-19. It's impacted us all. We've seen actually close to, if not more than 40 million unemployed because of this. Everything is shifting. So it's really important that you understand how to build a retirement. I was reading, I think on CNBC, they were saying that Social Security benefits are drying up even quicker now that COVID-19 and the pandemic has come to fruition. So having other options, especially outside of the stock market, which is extremely volatile, it's important that you understand the building blocks for getting cash flow. If you haven't, check out my 5-minute blueprint to financial freedom. It's another video on YouTube that goes into detail on how to exactly get there. So cash flow investment is the first option. It's an investor seeking monthly residual income versus quick forced appreciation through renovation, right? A value add is exactly the opposite. It's perfect for building your net worth. So if you're trying to build that capital to then invest in rental income, flips are perfect. These are basically like the shows you see on TV. They're typically projects that last anywhere from 4 to 12 months. I would say the rule of thumb is 6 months, unless you go really crazy with the renovation. And you can make anywhere from roughly about 10% on your money on a project out there. We can get into that in another video, but you need to know what avenue you're going down, because the way you make your offers will reflect accordingly. So choosing the ideal market, like I mentioned, there's factors you guys need to consider. The coronavirus is one of them, but in a sense, everybody still needs a place to live. So I would look at other things such as price and property taxes. For example, are you looking to buy a rental property here in Southern California, in which your prices for rental property are 500,000 plus? Or are you looking to maybe take advantage of something in Texas where the prices are a little lower, however, your property taxes are higher? So it really depends. You need to take a look at every market, every state's different. Also, more importantly, especially post-pandemic, the employment landscape, right? Who are the employers in the area? Is there a lot of tech around? Is this a big market in retail or government jobs? Who are the big employers in the area, and are they likely to stay there over the next couple of years? That's very important to consider. Neighborhood desirability, if you're going to be renting out a property or flipping it, being in good school districts, low crimes, finding the ugly home in the nice neighborhood is in a sense what you're looking for. And then also take into consideration seasonal weather conditions if you're doing a buy and hold, right? If you're buying something, towards Michigan or Wisconsin or, up in the Northeast, it's important to take into consideration possible pipe freezes, right? It gets so cold out there that you might have pipes freeze. That could be an extra expense that you don't want to deal with versus investing in somewhere like, let's say, Arizona, Texas, or the South, where they don't have those, those cold winter months to worry about. So knowing those things and taking those into consideration is very important. To leverage or not. So leverage in real estate terms simply means how much debt you're willing to use to build your portfolio. So higher leverage tends to lead to higher risk of default because you have more loan that you're paying back on and your monthly payments are higher, right? Higher leverage, what people don't know, can also magnify your returns as an investor. So I want to explain exactly how that looks. So in example one, I'm just going to use $100,000 just for easy numbers' sake. So let's say example one, you're investing $100,000 in one property. Okay, and let's say the rental income from that is about $1,000 a month. And your annual revenue is $12,000 on that $100,000 that you invested. So in a sense, you're looking at a 12% return. Now there's other costs and things that go into it, but I'm just showing you quick numbers' sake for the concept of leverage and how it can actually increase your wealth, because a lot of people are scared of it and they're like, well, it costs too much to borrow money. I don't know if I want to do that. So in example two, we're using the same exact amount of money, but we're doing it over 5 properties. So we're putting 20% down on each property. So now your rental income is exactly the same, but now you have 5 properties. So $1,000 a month times 5. Now your income's $5,000 a month. Your debt on that is $625 per property. Basically, I used a mortgage calculator to do a 30-year fixed at 4.5% interest rate, which is actually pretty high right now. It's, I'd say it's pretty reasonable for a buy and hold property. So I did that, $625 payment and interest. You do that times 5, you get $3,000 in debt, right? So when you take the difference of your rental income minus your debt, you have $1,875 per month net income versus your $1,000 a month on the left side. So now your annual revenue is nearly doubled to $22,500 on that same $100,000, right? So your 22% return versus your 12. So that's the concept of leverage. I put this here so you guys can dissect it, stop it, take a look, run the numbers if you want yourself. But plain and simple, guys, with more risk comes more reward, right? So those are things that you can take into consideration as well to expedite your financial freedom. Buying under market value. Cash flow investments are typically acquired at market value, maybe 5 or 10% less, because the investor is more interested in monthly rent. Now, with that said, a little hack there is you can find a property that needs to be renovated, buy it under market value, refinance it, get your money back, and you can use it as a cash flow investment as well. That's it. We can talk about that. Just shoot me a direct message if you're interested in learning more about that. I'm more than happy to walk you through the process and the qualifying criteria as well. Now, value-add investments are typically acquired at 20 to 30% below market value to account for renovation costs and profit to the investor that's renovating the property. Right, so you need to know what you're going after in order to make a good offer. All right, take action. The last aspect, the ultimate unit of measure is taking action, guys. Just getting out there, talking to people, making offers really is the name of the game, in the world of real estate. That's what propels you forward. That's what's going to get you results. So if you like to consider the next steps, if you're interested in different markets, I do have connections in lower price point markets with great returns. If you guys haven't seen anything yet, I have an example in the 5-minute blueprint to financial freedom. So take a look at that. Be more than happy to put you in contact with those people as well. Again, guys, I'm Eric Loya signing off. I hope you're having a great day. Take care.